Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, so an exciting FOMC day. It was very boring until the FOMC kicked in and we had a bullish reaction, and it was nice in the sense that it was no knee-jerk reactions back and forth. It was just bulls right from the gate, right out of the gate, and no real turnaround in sight. No fake outs, no big pullbacks. Nice, clear, steady, bullish reaction. So we bounced off the middle Bollinger Band twice in the past 5 trading days. Bulls buying the dip. Nice long lower wick showing bulls loading. Lack of upper wicks here. And we have big time follow through. So the upper Bollinger Band resistance is in the way, and that is leveling out, and it's going to begin ascending slowly, but it's going to be pretty slow going. So we do need to be watching that resistance level every day. We've got 239.44, 239.57, and then the all-time high, 240.32, is right there, and the bulls are still in full control, and we have new key supports to be watching. Pretty similar scenario in the sense that we had our consolidation low back here, little bull move, and a little higher low, and then a big-time bull move. Now we have consolidation low, little bull move, a higher low, big bull move. So our nice higher low pattern, easy levels to be watching, 236.19 key support. First one to be watching on consolidation. Middle Bollinger Band continues to ascend. Weekly chart. 1 week of consolidation, bulls showing back up, holding exponential moving average support. No sign of the bears. I keep seeing articles and people saying things about people predicting crashes and all that, but until we see it on the charts, I don't care about any predictions. And we're not going to get blindsided by a 5% dump and not see it coming. We're going to see a lot of bear volume, and maybe we won't get the absolute top, but we will get the move to the downside if and when it does occur. But it is not occurring, and the bulls are in full control. Apple and the tech sector was on absolute fire, and I'm actually not supposed to be looking at Apple here. I'm supposed to be looking at IWM. Little mix-up. Bear with me here while I get IWM and QQQ going, but the tech sector had the really big response here. So Facebook and Apple hitting both all-time highs today, Google all-time high, but that's in another video. So check out the tech sector video if that's what you're interested in, but we're interested in IWM and QQQ here. And big time follow-through, bullish reversal candlestick yesterday on IWM. Follow-through and confirmation today, but you can see where we are at relative to the S&P 500, still weaker. So personally, I'm not playing IWM bullish. If I want to play anything bullish, I'd play the S&P 500 bullish and SPY. And then if I want to play SPY bearish, the first place I'm going to look is IWM bearish because it has been seeing more magnified moves to the downside than the S&P 500. So there's bigger gains to be had there. But as of right now, it is seeing the bullish reaction with the markets overall. We've got the middle Bollinger Band resistance of 138.10. That level is going to be tested tomorrow as it continues to descend. And the bulls need to get over that to be looking back up towards the all-time high. But as of right now, after coming off of this pullback, we have to see higher lows and higher highs in order to be making it back to that all-time high. We're not just going to shoot right back up to that level. We're going to have to establish higher lows with some consolidation along the way. So a key middle Bollinger Band test tomorrow. Look at that weekly middle Bollinger Band right off of that level, 134.40. We actually bounced above it by 16 cents. But that level is holding, and we are forming a bullish candlestick this week off of that level. So our previous low was 133.12. Now our higher low, 134.56. And the bulls would love to get a new all-time high, but in my opinion, that would take a week or two of some bullish action before we get back up to those levels. QQQ, new all-time high, lead bull, tech sector taking it very, very strong. And the upper Bollinger Band, 132.07. We closed just above that level. So extreme strength, and that's why it's proving it is the strongest market here with that new all-time high. So 132.41 resistance, bulls maintaining higher lows. Again, we haven't even touched this middle Bollinger Band since the first 2 days of 2017. Extremely strong, bulls in full control, and in blue sky breakout. The weekly time frame shows that. Couple bearish candlesticks. Look at the last 3 months. 4, 8, 10 of 11 weeks in a row have been green, and that one red week, bulls bought that dip and we closed right up at the high. So this is an extremely strong move, and the tech sector is leading the way. Again, Google, Facebook, and Apple all hitting their all-time highs today. There's just strength everywhere, and we're not going to get sucked in and think that the market's going up forever. We're going to be taking it one day, 1 week at a time, and playing the upside as long as it's still giving us these gains, and it still is. So thanks for tuning in. We'll check back in tomorrow, and we'll see you then.